Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
We're going to look at question 2, response of this paper, Principles of Accounts 2021. And we begin with part A of the question, which reads, Edward is a sole proprietor who owns and operates Sundale Enterprise. The following transactions occurred in March 2021. And you're asked to use the information to prepare journal entries to record the transactions in Sunday's Enterprises book. And you're told that narrations are not required. So let's look at the first transaction, which reads March 1st, Marcella, a credit customer, owes Sundale Enterprise 4,800. So basically, you're showing that there was a sales of goods valued at 4,800 to Marcella, and this was on credit. So because that was on credit, the account to be debited would be Marcella, which is showing an increase in the value of what the debtors is owing, which is an asset. So that is why we are debiting. And the account to be credited there is sales, to show that there is an increase in the value of sales for the period. We're going to move on to March 17th. And that reads, Sundale Enterprise receives a check of 1,300 from Marcella for part payment on her account. So what we're seeing here is that Marcella is paying some of what is owing. Because she's paying some of what is owing, there is a reduction in her account. And because that is an asset, we're going to credit that. There's an increase in the bank account because we have received a check. So we're going to debit our bank account, which is an asset, and that is 1,300. And again, the account to be credited would be Marcella, to show a reduction in the value of what she is owing to the business. March 31st, which is the final transaction, Edward learns that Marcella has ceased trading and the remainder of receivables from Marcella is not collectible. Edward authorizes a write-off of the balance owed. So on March 1st, Marcella was owing to the business 4,800 based on the credit sales. She had paid $1,300 on the 17th. Having paid that 1,300, she's now owing the business 3,500. On the 31st, now that is known to Sundale that Marcella is unable to pay because she has ceased trading, would result in an increase in the expense of bad debt. So therefore, we're going to debit bad debt with that 3,500, and we're going to reduce write off Marcella account, and in writing off the account, what we're doing is reducing the amount that is owing to us. So upon doing that, there would not be any balance in Marcella's account. So that is part A. We're going to move into part B, and it reads, at the end of the financial year, on April 30th, 2021, Sundale Enterprise has trade receivables of 32,700 and a provision for doubtful debts of $1,170. Edward estimates that 3% of these receivables will become uncollectible. You are asked for part B, I, to calculate the amount required for adjusting the provision for doubtful debts account at the end of the year. In order to do this, the formula is debtors balance multiplied by the rate. The debtors balance there is $32,700, and we're going to multiply that by the 3% that may not be collected. And what we get is a value of $981. So that would be the balance in the provisions account for the period ending April 30th, 2021. What you're asking is to show the amount that would be used to adjust the provision for doubtful debts account. Last period, it was $1,170. Now we're seeing that it is $981. What is noticed is that there is a reduction. So there is a reduction, and the value that it decreases by would be the 1,170 minus the 981, and that would give us a value of $189. And this is the value that would be used to adjust the provision for doubtful debts account for the period. Now, the next part of the question, which is part 2, asks that you record your answer from BI in the provision for doubtful debts account to show where the adjustment should be recorded. All we're asked to do based on this question is just to show whether we're going to debit or credit the provisions account with the amount that it reduces by for the period. Once there's a reduction, it is a revenue. Your provision for doubtful debts account is debited, while your income statement or your profit and loss account is credited. We're going to put in our date, 2021, and that is April 30th, which is the end of the period. The account that will be used as cross-reference, the details, which is the other item affected, will be profit and loss. Remember, you could use income statement and just the amount that it increases by or decreases by. In this case, it has decreased by $189. We're now going to move into part C. Complete the following tables to show how each of the following transactions will affect Sunbale Enterprises financial statements for the year ended 30th of April 2021, giving an explanation for each transaction. So all you need to do is to read a transaction and indicate whether or not it will be recorded in the accounting books of the business. That is, will it affect the financial statements? We're talking about the income statement. We're talking about the profit and loss account, which is the same thing as the income statement and or the balance sheet. Will it affect the financial statements? The first one, read, receive an order from a customer for goods to be supplied in June 2021. Remember, we are in April. Will this item affect the financial statements in April, yes or no? And the response there is no. Why? What would be your explanation? The thing is, this is just an order that was placed. No transaction took place there. So therefore, because no transaction took place, the income statement nor the balance sheet, the financial statements basically will not be affected. When this transaction takes place, which means that when the order is sent out to the customer, then there is a transaction, and that is the time you will be recording that in the financial statements. Next item reads, Edward used his personal savings to purchase a vehicle for its private use. Will this affect the business financial statements? And that response is no. This is a personal transaction that was made by Edward. And under the business entity concept, the transactions associated with the business must be separately recorded from those of its owners or other businesses. Doing so requires separate books. So because this is a personal transaction, it should be recorded separate and apart from the business record. So that transaction should not be recorded in the business books, and hence it will not affect the financial statements. We're going to move into the third one, which is the purchases account was incorrectly added up and was overcast by 1,600 at year end. Will this affect the financial statements? Definitely, yes, it will affect the financial statements. The fact is, purchases is used in the income statement to calculate your profit, right? To ascertain if the business made a profit or not. And if that is overstated, it means that it's going to affect the profit by showing an understated value in the profit. So definitely, yes, that will affect the financial statement. We're going to move into part D of the question. On June 1st, 2021, balances taken from the purchases ledger of Sundale Enterprise were as follows. You're presented with the information relating to the purchases ledger, and you're asked to prepare the purchases ledger control for the month ended June 30th, 2021. Balance the account and bring down the balance on July 1st, 2021. No, we're going to move into preparing the purchases ledger control account, and we begin with the balances. We're presented with debit balance as well as credit balance. So we're going to put in each. At the beginning, it's the debit balance. When we say balance, it means that that is the balance brought down. And the year is 2021. The date is June 1st. Details, balance brought down, and because it states debit balance, we're going to enter this value on the debit side, and that amount is $1,020. The credit balance is $29,040, and because it's opening balance, you're going to go with what they indicated. Put that on the same side, which is the credit side, and that is June 1st. Details, balance, brought down, and the amount there is $29,040. Moving into the transactions that were taken from the books of original entry on June 30th. And the first one there is credit purchases. The credit purchases there is basically indicating that goods were purchased by the business on credit, and that results in an increase in the creditor's account. Don't forget that when you're preparing the purchases ledger control, you're using that same principle as preparing your creditor's account, your supplier's account, which is a liability. Because when there is an increase, you're going to credit, and if there's a reduction, you are going to debit. So here we go. The credit purchases will result in an increase, and that is at the end of the month. Details would be credit purchases, or you could call it your purchases journal, because that is where the details would be taken from. And the amount there is $124,410. Payment of trade payables, basically stating that you have paid a part of what you are owing to your creditors, and that will be a reduction in the account. So we're going to debit. That is June 30th. Details, bank, because the method of payment was not given, and the amount there is $109,350. Next, we move into discount received. Discount received will decrease the value of what you are owing. So therefore, that is also a debit entry. That is discount received. And the amount of discount received was $2,970. Next, interest charge on overdue accounts. This is going to increase the value of what you're owing to your creditors. So therefore, that's a credit entry, and you can call that interest charged. And the amount of interest charged there is $630. Contra entries set off from the sales ledger, meaning there's a reduction in the sales ledger as well as the purchases ledger control, because there was a split between the debtor and the creditor. Because remember, the same person that is your supplier may just as well be your customer, and what, based on agreement, you will split out what is owing. So there is a split of $100, and that is a reduction. Remember, that is set off. In setting off, your sales ledger control will be credited, and your purchases ledger is debited to show that reduction in the account, and that is $300. So what this is saying is that you are no longer owing the supplier $300, and the customer is no longer owing you that $300, because again, the same person that is a supplier to the business is also a customer, and based on agreement, both parties decided to squeeze out that value that is owing. The final thing there, based on the information provided to us, is that balances at April 30th, 2021 for the purchases ledger were as follows. Debit balance, $540. Remember, when we talk about balances, we're saying that this is a balance brought down. If this is a debit balance, meaning the balance brought down should be reflected on the debit side, it means that we're going to credit this value because the balance BD must be reflected on the debit side. So crediting the balance carried down of $540. Know that we have entered everything that is given to us, and based on information to you're seeing clearly that we are going to have a credit balance, but the amount is unknown. We need to calculate that. So we need to proceed to balance of the account. In balancing of the account, based on calculation, your debit side is short of $40,980, and that is our balance carried down, and our totals is $154,620. So that is entered on both sides, and remember, they must be on the same level. To close off the balancing out process, July 1, which is the beginning of the next month, balance brought down, and that's the very same thing as the balance carried down, which is 540. Remember, the balance brought down is opposite of your carried down, and we have a balance carried down on the debit side, which means that we have a balance brought down on the credit. That's July 1. Our details, balance brought down, and the amount is $40,980. And the final part to this question is that you're to state one use of control systems in the accounting process at Sundale Enterprise. Now, basically what it's asking, why does a business prepare or do control system? Why is that they use control system? And basically to ensure that accounting records are accurate and reliable. You could use to check the arithmetical accuracy of the ledgers. You could use to detect and reduce the chances of fraud, and there are others.
Like, share, and don't forget to subscribe.